Welcome to the Explainer. Today, we're going to pull back the curtain on something that can seem really complicated, the language of the market. We're going to show you how to look at a price chart and actually see the story it's trying to tell you. So let's start with a little story. Picture this. It's the 1980s, and a young trader is standing in one of those loud, chaotic trading pits. He keeps seeing the market hit a certain price, and then, bam, a flood of orders comes pouring in. He noticed that some traders, they just seemed to know. They were almost always right. And it made him wonder, what were these people seeing that I'm not? You know, that feeling that there was some kind of hidden language right there in plain sight? That was the start of a journey for him. And it wasn't about getting some secret insider tip. It was about learning to see the signals that most people were completely missing. And here's the thing. The answer to that mystery wasn't magic. It wasn't some kind of secret code. It was a skill. A discipline, really, that anyone can learn. It's called technical analysis, and it's all about reading the market's own story.
Okay, so what is this skill really? Let's dive in and start decoding what it actually means to read the market's footprints, because that's the key to unlocking the whole thing.
At its absolute core, technical analysis is just the study of charts. The whole idea is that the past can give you some seriously valuable clues about the future. You're looking at how buyers and sellers acted at specific prices before, and that gives you powerful insights into where the market is likely to go next. I love this quote because it paints such a clear picture. Every single trade, every time a buyer and a seller agree on a price, it leaves a little footprint. And when you string all those footprints together, you get a trail. A skilled analyst just learns how to follow that trail. Now, for any of this to work, you kind of have to buy into two big ideas. First, that everything you could possibly know, news, earnings reports, economic data, it's all already reflected or priced in to the market price. And second, prices don't just move around randomly, they move in trends. And that's just basic human psychology, right? Fear and greed create momentum. So, and this is maybe the most important takeaway here. This is not a crystal ball. Technical analysis is not an exact science where 2 + 2 always equals 4. It's much more like a radiologist looking at an X-ray. The image is the same for every doctor who sees it, but the skill, the expertise is in the interpretation. Two brilliant traders can look at the exact same chart and walk away with two totally different game plans. All right, enough with the theory. Let's get practical. How do you go from just watching the market to actually analyzing it? Let's talk about your very first tools. Before you even think about downloading fancy software with a million indicators, your first and most powerful tool is simply a price chart. That's it. And your number one skill? Learning to just observe. To look at the chart without any bias. Does it look like a mountain range with jagged peaks and deep valleys? Or is it more like waves in the ocean, rolling in and then pulling back? Okay, here's a really powerful exercise for you. Seriously, try this. Grab any historical chart and cover it with a piece of paper. Now, slowly slide that paper to the right, revealing the price one bit at a time, like it's happening live. Whenever you feel that urge, that instinct that says buy or sell, make a little mark. Then, when you're done, pull the paper away and see what happened next. It's an amazing way to train your eye and get rid of that pesky hindsight bias. As you start doing this, you're going to notice something interesting. Prices seem to get stuck at certain levels. We call these support and resistance. Support is like a floor. It's a price where buyers tend to step in and stop a downtrend. Resistance is the opposite. It's a ceiling where sellers take control and stop an uptrend. These levels aren't magic, they're pure psychology. They represent a kind of collective market memory. So once you get the hang of reading the basic landscape of the chart, the floors and the ceilings, it's time to add a compass, a tool that helps you confirm the direction the market is heading. And one of the simplest yet most effective indicators out there is the moving average. It's just what it sounds like, an average price over a specific time, like 50 days. But its real magic is that it smooths out all the wild day-to-day noise so you can see the cleaner underlying trend. But why does this even work? Well, here's a great way to think about it. Imagine you think a house in your neighborhood is worth about $200,000. Then it sells for $250,000. What happens? Your perception of its fair value starts to shift upwards. A moving average is just a way of mathematically tracking that shifting collective perception of value in the market. So the big question is, which one do you use? A long-term one, like a 200-day average, is like a big, slow-moving ship. It shows you the major overarching trend. A short-term one, like a 10-day, is like a speedboat, zipping right alongside the current price. There's no right or wrong answer. You just pick the tool that fits your style.
And that brings us right back to the central idea here. This whole thing isn't about finding one perfect indicator. It's about building your own unique way of seeing and interpreting the market.
Look, your ultimate goal isn't to find some magic indicator that screams, buy here. The real goal is to find a tool, like a moving average, that helps confirm what you are already starting to see just by observing the chart. The indicator is your backup, your second opinion on the signals that you've already found. Because at the end of the day, it all comes down to this. Your personal opinion about where the market should go, it's completely worthless. What matters is the market's behavior. The whole point of technical analysis is to shut up, listen to what the market is doing, and adapt. If you can't adapt, you lose. It's that simple. So, as we wrap this up, we'll leave you with the one question that every single technical trader asks themselves when they look at a screen. The chart shows you the footprints. The trail of where the market has been is perfectly clear. The only question that matters is, what is it telling you about where it's going next? Hey, if you found this useful, do us a huge favor and hit that like and subscribe button. We've got plenty more explainers just like this one coming down the pipe. Thanks for watching.